welcome to Economy and Markets TV, the show that takes you around the world of economic and financial news. I'm Dave Okenquist, Senior Research Analyst here at Dent. It is Friday, which means it's time for the regular weekly dive into the news, and that means I bring on Rodney Johnson. Rodney, welcome.
Thank you, Dave.
Rodney, of course, is the Senior Editor and Co-Founder of Dent Research. Rodney, it is we're into May now, and May the 4th be with you, Rodney.
Well, thank you, and happy Cinco de Mayo almost to you as we are celebrating down here in Texas.
Yeah, it should be a fun one here in Florida as well. Rodney and I, we pick the most important items of the news, and we go through them as quickly as possible, but also concisely. And to that end, we try to keep things under 2 minutes, and I've got a bell here, and I am clearly not afraid to use it. Rodney, are you ready to get right into the first topic of the week?
Let's do it.
All right, the big one is, of course, the news of this morning. The U.S. economy created 164,000 jobs. This is off a bit here. We expected 191. This is the second month in a row of disappointment. But on the positive side, unemployment is at a record low at 3.9%, which just sounds crazy, right? But Rodney, I got a question for you. What's going on these last couple of months? There's this week or this month, is it the weather? There were double the normal claims of people claiming that weather was the reason why they couldn't work. Something Harry's been talking about for a while is that we're just kind of running out of people, and that's a little bit being borne out by the high overtime numbers that we saw this month. Or are we just not growing enough?
Well, I mean, enough for what, right? I mean, if we're looking for people to go to work, we have that. As the unemployment number shows at 3.9%, we're below what's called the natural, non-accelerating inflationary rate of employment, NAIRU. So we're in a place where a lot of people are at work. Are we going to bring in more who are not in the workforce? It's possible. But you got to start with the numbers. 160, 190. This is out of an economy that has over 150 million people employed. And so to get noise of 20, 30, 50,000 one way or another is meaningless. I mean, the statistical noise is truly meaningless. More interesting is the long-term average. We're still clicking along at about 200,000 jobs a month, and that hasn't changed. If we saw that change, if there really weren't enough people out there, then the other part of this measure, which is, of course, the income side, which you alluded to with overtime, we would see on the way up. And the annual increase in income was 2.6%, where analysts had expected it to be 2.7. So it disappointed just a bit. That's the number that we need to be watching now. As long as the number of jobs stays around 200,000, as long as the unemployment rate remains low, it's that increase in wages that could actually drive inflation, and that would be something to watch.
Yeah, we'll definitely see a lot. We'll see that kind of thing put a lot of pressure on employers as well, right? Which could have a negative effect, possibly. If they start having to raise wages, I know that's always like anathema here. We've been for the last few years anyways.
But that's a good thing. That's what we want, right? And we're starting to see more of those towns in the middle of the country that are paying people to come work for them. People are hiring at the low end, which is where it tends to start. And so there are a lot of help wanted signs around, and people say they can't find workers. They're going to have to start training workers. And that's really the key. It's not that a lot of these employers can't find a person. They can't find a person with the skills they want them to already possess. Yeah. And so we do have to train them.
Yeah, absolutely. And just real quick, I did see a story. If you may be referring to a story out there in the Wall Street Journal about just trying to attract people to move anywhere. So that's something that we've lost over the years, right? That's sort of that physical mobility. So that's great to hear that. Let's move on to our next one. You mentioned the Fed. So the Fed had their meeting this week, and they left rates unchanged. Rodney, it seems like the Fed has what it wants. We have inflation right where they want it, and unemployment is at a record low. So we're just going to keep going on here? Are they going to keep unloading their balance sheet?
Yeah, there's a philosopher from 600 BC who said you never step in the same river twice. And we're in that place where it is true that unemployment is quite low at 3.9%, and inflation, the Fed's preferred measure of inflation, is right at 2%, which is their level that they want. But we never stay in that place. That Goldilocks doesn't sit around. And so we can expect things to change. It's probably going to be that inflation walks up a little bit, and you can't forget oil in that, as oil is in most everything. Either it's in it to produce it or to transport it to be sold. And so you'll see prices walk a little higher, and that'll put pressure on the Fed to raise rates, perhaps not 2 more times this year, but maybe 3 times. And if people aren't aware, the Fed has 2 types of meetings. They have the ones that they issue a press release and then have a press conference afterwards. And then they have the ones where they just issue a statement. They typically raise rates at the ones where they have a press release and a conference, and they have 3 more of those this year. And so the next one's in June. I expect them to raise rates. It leaves them 2 more opportunities, September and December of this year. And so higher rates tend to be a negative for the equity markets, which is something we've talked about here for some time.
So, Rodney, are you suggesting that we could be having an inflation problem?
Yeah, it's not inflation in terms of runaway inflation, strong inflation, any of those things, but it is a situation where we could see prices bubbling up from wages on one side and then energy and some other forces on another. And the Fed would want to rein that in so that inflation doesn't go too far. The weird thing is we're so far away from normal with short-term rates at 1.5 to 1.75%. People have kind of forgot where normal is, and normal is closer to 3. That's a long way from here.
Yeah, absolutely. Well, it's certainly something to keep an eye on. And yeah, we're just, the economy is getting back to normal. So it seems like we're just going to be in a wait and see mode continuing. So, well, let's move on to we'll move on to the Eurozone. Actually, we had the first quarter GDP. It was up 0.4%, 2.5% up for the year. EU unemployment is at 8.5%, and that varies widely, doesn't it, Rodney? And just by comparison, the highest one I think you said was Greece. It's around 20%, right?
20.6. Yep.
The highest U.S. state unemployment rate is 7.3. By comparison.
And in Europe, as you said, I mean, it's wide variation. Germany's, I believe, at 3.4, and so lower than the United States. France is the second best at 8.8. Because they have so many people in those nations, it pulls the average down. Spain, I want to say, is 16%. And so there is a lot of variation. You got to look at those 2 things together. Their GDP is 0.4%. They talk about it quarterly, whereas we talk about it on an annualized basis. And so you can look at that 0.4 and say, hey, what does it mean for a year? It's not just 4 times that at 1.6. Their estimate is right at 2% this year, which is lower than their last year average of 2.5. And so they do see a softening economy over there, which is what has them concerned, particularly in the European Central Bank, because a softer economy overall means that they're not going to be in any rush to end their bond buying program. They still print $33 billion worth of euros every month and buy bonds, and they're still holding their deposit rate at a negative 40 basis points. I mean, you want to talk about far away from normal. That is not normal. And so you look at that unemployment, they don't want to do anything to rock this boat of the growth that they have. And so chances are they could keep those programs in place a little bit longer, which pushes down the euro and pushes up the US dollar.
Yeah. Well, I mean, these unemployment rates have been the same for years now, and it just seems like it's just that intractable problem of these disparate countries that it's just so hard to manage all of them under one policy.
Well, their unemployment rate has fallen consistently, but it falls very, very slowly. I want to say they went through 10% maybe 2 years ago. But, you look at 8.5, that's not far down from 10. And it just takes a long time for it to eat into it. A lot of these countries have very generous social programs. And so you see that feeding into some of the unemployment side.
Yeah, absolutely. All right, let's move on. We got one quick update to the trade wars of 2018. News came out this week that the trade deficit, U.S. trade deficit, narrowed a bit. And that was reflected in some of the employment numbers, actually, Rodney, because we saw a gain in manufacturing employment, the durable goods, which was one of the things that we sent off to the world. But the markets just they bounce really high and tank whenever there's any kind of news on this, doesn't it?
Yeah, the trade deficit's a weird one because of the components of it. Do you want a low trade deficit? Well, I don't know. That's an arguable thing. I don't get hooked on that particular measure. Right now, it's more about trade negotiation because we have the big negotiation going on with NAFTA. And we have, of course, the huge negotiation going on with China, where we have a trade delegation in China right now. And so every time we get a piece of news, positive or negative, the equity markets over here immediately react, driving those international companies up and down based on whichever way the news goes. And so I think we'll get a settlement. As you and I have talked about here, I don't believe President Trump is principled on trade. I think he's pragmatic.
Right.
And what he wants is a better deal. And so when he arrives at something that he believes is a better deal, it's going to get signed, it's going to get announced, and I believe you'll see a sigh of relief in the equity markets. I don't think it'll last. I mean, I don't think this market is going to tremendous new heights, but I do think we'll get a bit of a relief rally.
Yeah, excellent. Great points there. Last little bit here. Elon Musk. It's a guy you've kind of been beating on over the last few years, Rodney. I was going to maybe call it a love-hate, but I don't know if the love's there.
No, and he doesn't know who I am, so he doesn't know to hate me. So what can you do?
Exactly. Just in brief, Tesla beat earnings, but instead of the stock market doing well, it tanked. Pretty much because of what some people are calling a temper tantrum by Elon Musk on some questions on a conference call.
Yeah, he came out and basically, as an analyst was asking a question, he said the question was uncool. Yeah. That is the term he used. And he said that the questions were dry. And he just didn't want to talk about things like, the Model 3 production anymore.
I like that, though. I think that's a good, whenever somebody asks me something that's really going to, hurt me, that's not cool.
That's not cool. Hey, what he should have said is, look, I keep giving you targets and I keep missing them. So it really doesn't matter what I say because chances are I'm going to tell you something that won't turn out to be true.
Yeah.
Because that's what Elon Musk has done for many years now when it comes to Tesla and production numbers and sales numbers and all sorts of other stuff.
Yeah.
But people are enamored of the product and the idea, which I totally understand. I would love to drive a Tesla. I can't really justify $100,000 for that car. So I don't own one, but they're really cool. But that doesn't make the company a long-term viable entity. And that's what I've always talked about. As Tesla is ramping up and trying to get things out the door, trying to produce more Model 3s, which it's still not on track for and is burning cash, other people are coming to market. Jaguar has the I-Pace that is taking orders for right now, and they will produce the car. There is no question you'll see Jaguar I-Paces out there later this year. And nothing's going to kill Tesla faster than competition from the other luxury manufacturers. And it's coming very fast.
Yeah, absolutely. I have to say, I do have a soft spot for Elon Musk. I understand all the arguments against him. I know he overpromises. He is, people call him a corporate welfare guy. But I like it, though. I like that he literally reaches for the stars. I mean, he's sending rockets out to space. He's just trying to he's trying to do something new, which is he's not just trying to extract rent from an existing economy. So I like him for that. And that's all I will say.
And we shouldn't discount the fact that he is one of the people who started PayPal. I mean, let's go back to the beginning. He did break a monopolistic banking system to allow us to create reasonably secure transactions over the internet, which was incredible. And so that's where his wealth came from. And so his vision does lead us to a lot of places that are very interesting. And yes, give him credit for it. But on the flip side, you still have to run the company profitably. So that's yet to be seen.
Yeah, reality does tend to bite. Okay, that's all we have to say on Elon Musk. Looking ahead to next week, we're going to have news on inflation. And then eyes are going to be on these trade negotiations that Rodney said, and then we're going to have probably be looking at the battle for who's going to win the Nobel Peace Prize, with, of course, referring to the talks with North Korea, all that ongoing stuff. Any thoughts on that, Rodney? The world does seem a little bit safer today than it did feel maybe 2 weeks ago, so that's good.
Yeah, I'm not getting into the Nobel Peace Prize fight. That's a very weird one and has been for a long time now. I'm much more interested in the trade situation, how that's going to go. And even inflation, we can't discount that number coming out next week because that is going to feed some of the speculation on what the Fed's going to do. And that could change interest rates and certainly change some of the direction of the market here in the U.S.
Absolutely, Rodney. Thank you so much for joining me. Thank you all for watching and listening. You can find us at dentresearch.com as well as economyandmarkets.com. Please subscribe. Thank you all, and we'll see you next week.